how do you pick which trade on your typical day between crude and S&P? I look at both at night, and whatever I think has got more legs to it, if, you know, in the evening. Most of my trading is in the S&Ps, and I kind of only really don't do a lot of trading in the crude oil. But this happened to be a good day, so I look at the daily the night before, and then I will kind of make a decision then, and I'll keep an eye on it. I have the hourly and the 15-minute, I think, up on my S&P chart, the crude oil, just to look at that. So I do that. So let's take a look at Friday. So Friday, again, I'm giving you more of what we do. We do this in deep practice every week. We look at the daily first and kind of estimate that, and then we could drop down a time frame to the 240 and see if that confirms, and then that sets us up really nicely for the trading for the day. So we have this number out here, and it's an obvious number. Every trader can see it, and it's sticking out there like a sore thumb. And so I'm aware of that, and I know that, and I've got some strength coming in here on the daily. So I'm expecting this to potentially break, right, as we come in. And I would be looking for an opportunity to trade to the upside. Well, look at what happens. We were underneath yesterday's high all night long on Friday, and then we get this rally up. Look at how weak this rally is. This is all really choppy, right? Just not a really strong rally at all. And we come up to yesterday's, the multi-day high at 47.11. We make all-time new highs. We get new highs in here, but look at what it does. This is a buying climax, right? We're coming along, and then suddenly we get this climactic run up. The volume expands dramatically, and we get poor close. Next bar on big volume, same amount of volume as the climax, is a down bar. This is negative. You should be looking for this all the time, even though the Weiss wave is showing strength, and actually the Weiss wave is showing climactic action here. This is negative. And so we just wait for, you know, our favorite trades, no demands or supply coming in, hidden up thrust, those kinds of things. We get a no demand on bar 3. We can short that with this kind of supply in the background. Another nice little opportunity, no demand, is on bar 4. This is what Wyckoff used to call being on the hinge. He would look at this and he'd say, you're right here in a little triangle, and you're right in the middle of that, you know, the wide edges of the triangle. This one happens to be a little bit lower, but we're right on the hinge. And he would say a feather's weight one way or the other is going to tip the balance, and the person, the trader who can determine what that feather's weight is likely to be is going to do well in trading. He wrote that in Studies in Tape Reading. And that's exactly what we're doing here. We're tape reading this, seeing supply come in at higher time frame resistance, climactic action on the lower time frame, supply coming in on the lower time frame, breaking the uptrend channel, the demand line here, then giving us no supply, going on to the and going into a hinge on no demand. There's just no demand in here. And again, you can draw a line through here, hit every one of those. This is just congestion. There's no rally in here. And in fact, it falls and drops down. And on 5, we get confirmation. The volume picks up to the downside, and we come all the way down back to support, where we start to see the market hold. And that's another, you know, nice little trade of a good 10 to a dozen points there. And those are the kinds of trades I like to look for. Okay, so why didn't we short at 6? That must be the other. You could have. It's the area. Yeah, you certainly could have. No reason you couldn't have. Do you think there's any problem with making preparation 30 minutes before opening instead of the night before? Yeah, I think there's a lot of problem with that. you're not giving yourself any time to really think through the market and really study it and see it. You've got to be looking at higher time frame. The 30-minute, what I do the 30 minutes beforehand is I'm prepping. I do a little bit of mindfulness meditation, and I'm looking at the overnight market, and I'm comparing what the overnight did to my analysis that I did the night before, and I'm determining whether that still is in keeping with my analysis or has something changed. So don't do it all at that 30 minutes before the open. Do it in, that's the time to be looking to see what the overnight action was like, and whether that's going to be it's still consistent with what you saw the night before. Where's your stop here? On bar 3, I would put it just above the multi-day high, even though you've got this in here. If it starts coming up through the multi-day high, it probably is probably going to continue on up. Something was wrong in the analysis, and I don't want to be in there if that's the case. So that's where I would put it. I wouldn't put it all the way up here. It's a little bit too far. It's probably about 6 or 7 points up there. That's a little too far. So in that case, I wouldn't be trading. I wouldn't, put a gazillion contracts on, because the stop is high and I've got to bring it down smaller. And I still would bring it down tighter. I still would do that, but I wouldn't put on, as I said, a gazillion. I put on only a smaller number than a gazillion. Okay, let's take a look at current markets. Gold, I think, is in a really interesting situation. We've been waiting for gold to do something for quite some time. And we'll just highlight the weekly and the daily. You can see that on the weekly chart, we had been coming down. There was a nice trend channel that had developed. We held support in here after rallying up and breaking the trend channel, although we came back into the trend channel, a little unusual, but holding support. Now we're back out of that trend channel on the weekly basis. This is the weekly and the daily. And we've rallied up, we've jumped across the creek. Look at all the cause we have in here. In other words, the preparation for this. This has legs. This could be quite a meaningful, potentially a meaningful rally. So now it's coming back on top of what? Old resistance now turns into support. We've seen this a couple of times on the intraday. It's no different on the weekly or the daily. So here we are, we're in a position, this is the daily, this red line here is the same as this red line on the weekly. Let's get the pen out here. So these two lines are the same. And so we're in a spring position. And I notice that we have, good move up, good volume coming up, and we're holding gains. We try to go down on heavy volume, don't do a lot with that. That's effort to go down, no real result, meaning that sellers were pushing down, but buyers were stronger, the superior force, and kept the market from, dropping down like that on big volume, bigger volume. So I'm looking for this. This could come down into this area, could come a little bit lower. You've got this level in here. But I'd be looking for the spring to occur on the daily, and then be looking for a nice trade. And then the target, we have 1919 here as the first target, but I'd actually have it a little bit higher to 1923 or 1925. That 1923 is the all-time. It was the high made in 2011, and we did come up through that back in the summer of last year, summer of 2020, but then came back down underneath of it. And we've been underneath of it. That's roughly, what is it, around this level here, a little bit lower. We tested it a couple of times in here, tested it again, and now we'll go back up. And this time I anticipate we're going to go through it, but we'll have to see what happens when it gets there. All right. Crude oil. Oh, everybody's saying big, selling off and so on and so forth. Yeah, maybe we're getting a little shortening of the thrust. in the wave action going up, or in the swings, you can see 1 up, 2 up, 3 up. The up waves are still bigger than the down waves. As I say, we're getting a little bit of shortening of the thrust, and I just was estimating it on the tops of the waves here. That's what this graphic is over here. But still quite bullish. You can see that we sprung this low here, this support, rallied up, nice demand going up into the highs here. Now we're coming down a little bit, and we broke the 2018 high, which is what we just went over the top of. So this is a fairly significant level, and you're not going to see it, drop like a rock. I don't think you're going to see it drop like a rock from here. That would be unusual. Not to say that it's not possible to do. It's certainly possible, but it's not likely. Notice that the volume just isn't that strong. So that we're going to come back area here, a couple of, probably confusing you. I don't mean to do that. This is a little bit longer of a trend line, and then this is a reverse use of trend line off of here. But I'm anticipating it's going to come down into the 72 to 71 to 70 area and try to hold there along this line. Could come down into here. That would be a little bearish, but because it would have broken this support. But let's see what happens when it gets down into here. See if that support doesn't hold. That's what I'm looking for in crude oil. Bitcoin. This is an interesting one here. So this is the weekly chart and the daily. Let's focus on the weekly for a minute. We have an up thrust in here, and it looks pretty negative, right? But it may not be so negative. It doesn't look that negative to me. We can look and do a little comparison. I learned this from Roman Bogomagov. I'm probably mispronouncing his last name, but he's the head of Wyckoff Analytics. He taught with Hank Pruden the Wyckoff course at Golden Gate University. Hank, of course, died a few years ago, and I don't think Roman teaches there any longer, but he's a pretty bright guy. And he would call these areas analogs, analog bars. I just look at them as we're in the same area. And yes, these are analogous, right? So let's see what the strength was here and what it's here, and can we anticipate a little bit about what this reaction is likely to be like. So let me ask you this. What do you think is more bearish, this or this, and why? Let's do a little interactive here if we can. What do you think is more bearish? And we'll call this one A, or 1, doesn't matter, and this one is B or 2. Gap down on the left. Good, Vasily. Very good. A is more bearish. Henri. Yeah, good. B is more bearish, says Deepak, excuse me. Volume increasing on down bars. Yep. A is more bearish. Yeah. Increase more important on B. Yeah, exactly right. So this is important. This is useful Wyckoff stuff, right? So which is more bearish? Well, there are a couple of things going on here. Obviously, there's larger volume, right? We have 2 down bars, and the volume is appreciably larger than on B. A is larger than B. We also have a gap down, which we don't. We tried to rally up and we tested here and then came down first. So that's also negative. We're going lower from basically the same level, right? This bar is starting from here. This bar starts from a little bit lower, but we're making a little bit farther distance. The other thing too is that we only came up here once, right? And then fell off. Here, we have a couple of times where we've tried to go up. Actually, we tried to test this 1, 2, and then this one here 3 times. So there's more active buying going on up in here, making this a little bit more bullish. So what can we deduce